Welcome to part one of our due diligence series, where we're going to discuss the different asset classes within commercial real estate. So in this video, we're going to talk about the pros and cons of the most common asset classes and why, after careful consideration, we chose to invest in multifamily, also known as apartment buildings. So let's start with multifamily real estate. Multifamily properties are so stable because they fulfill a fundamental human need: shelter, specifically affordable shelter in our case, because that's typically what we invest in. And regardless of economic conditions, people will always need a place to live, which makes this asset class recession resistant and a reliable source of cash flow as well. Now, beyond stability, multifamily real estate also offers excellent opportunities for appreciation and tax benefits. So through strategic value-add initiatives like renovating, rebranding, and improving the property management, we can significantly increase rents and therefore the overall value of the property, leading to robust returns for our investors. And right now, we're facing a critical shortage of affordable housing in the United States. And this is because of the rising costs of construction driven by inflation. It's become nearly impossible to build affordable housing, which means there's a growing population chasing a finite amount of available housing. There's a report by the U.S. Government Accountability Office, and one of many, when they estimate that this problem is getting, well, not only getting worse, but is currently short about 3.2 million homes. And there's no end in sight because developers have not been pulling permits over the last 12 months. So within the next several years, that's just not going to change. And that shortage, and that is a shame because we really need to solve this problem. But with respects to the multifamily, the shortage is driving up demand, and as a result, rents will continue to increase for the foreseeable future. Let's talk about another asset class, which is self-storage. Self-storage facilities are often touted as a great investment due to the relatively low operating costs. However, it's important to keep the risks in mind, particularly during economic downturns, because when times get tough, people may decide they can no longer afford to rent a storage unit, and since self-storage is not an inherent need, it's often one of the first expenses to go. Additionally, the industry has seen an influx of large institutions that can lower their prices to drive competitors out of business, which can lead to thin profit margins. Now, this level of volatility made self-storage less appealing to us compared to multifamily. Next up, mobile home parks. Now, while these properties do also provide housing to the residents, which is a fundamental need and it's also affordable, they can come with operational challenges, primarily due to the tenant type. Because mobile home parks typically attract lower income tenants, which can lead to higher delinquency rates and increased maintenance costs. And managing a mobile home park requires a lot more hands-on work compared to multifamily properties, and therefore it makes it less attractive for us. But we also think for passive investors looking for more stable returns. Now, then you have retail properties like shopping centers and strip malls, which unfortunately have been struggling for years, even before the pandemic. And retail has suffered from high tenant turnover and can take months to replace a tenant, leading to prolonged vacancies and lost income. And in addition, retail isn't a basic necessity like housing, which makes it much more susceptible to economic downturns. Consumers are also shifting more towards online shopping, and that puts further pressure on this asset class. Now let's talk about office space, which unfortunately has been decimated over the past few years. And due to the rise of remote work, the demand for office space has dropped significantly, leading to plummeting property values. Like, for example, in 2023, Rubicon Point Partners bought a 137,000 square foot office building for $73 million, which had previously been purchased for $140 million in 2020. That's almost a 50% drop in value. Another example is a 12-story office building in Chicago that was bought for just $4 million when it was last sold for $51 million in 2012. Now, these examples point to a reality where office is no longer really a premier asset class investment, and it was for many, many years. It was this kind of unforeseen thing that happened through a pandemic that never happened before, and it doesn't really look like it's going to improve drastically in the coming years. In short, while there are good deals in other asset classes out there, we have chosen to focus on multifamily for these many reasons. Housing is a human necessity, which makes multifamily real estate inherently more stable and less risky. Even during economic downturns, I like how it behaves in economic downturns, and occupancy rates in multifamily properties remain at least stable in these kinds of environments. Now, for example, despite recent economic challenges, national occupancy rates for multifamily properties have been hovering around 96% since June of 21. And that's amazing, especially given the experiences and ups and downs we've had. And in addition, the multifamily sector has shown consistent rent growth over the years as well. Now, while rent rates have slightly decelerated in recent months due to higher interest rates and a huge run-up in 21, they remain at record highs, and that ensures steady cash flow for investors. Now, to us, this combination of stability on the one hand and growth potential makes multifamily real estate the best choice for those looking for alternative investments in real estate. Now, in the next video, we're going to continue our series on due diligence by discussing the second type of due diligence you need to do, and that is on the sponsor. And then we're going to do the deal itself and the third part as well. Once you decide to invest in a certain asset class, for example, multifamily, it's then important to decide who you should invest with. And that's what we're going to cover in the next video. See you there.